Hey guys, this is Julie. Good afternoon. When we got a little bit of the negative gamma pushdown, the volatility expansion kicked in, and we got back to the Friday settlement, which um, right here at 66.9650, we didn't quite reach the dealer gamma at 66.80, which would have been by our daily ones. So we'll save some room for tomorrow. um, Tomorrow is the end of the quarter. So just keep that in the back of your mind. So we have to, pay attention to those quarterly lines. And I see that my quarterly twos are holding resistance 67.54 through 67.46. I still have that 6-month one sitting there at 67.74. So we'll keep those levels in check for tomorrow. It's a you know, not like the options quarter where that was like already has transpired middle of the month. This is the end of the month level that I calculate with my historical volatility. And it coincides with this JHEQX, which will be, on the table for tomorrow. It is down here at 65.05. Now the dealer's fully hedged up here, but we're practically, well, I guess we're now back above the point, where we would be able to reach it easily. We bounced back up a little bit. So, if, some negative news came in, it would certainly be reasonable to think that it would be hit, but the dealer is very happily hedged. So I'm not even focusing on it at this point. So their hedges are also with the ES. So keep that in your mind. Um, and that would be these quarterly twos up there, 67.54, 67.46. And those are the 90-day twos. Oh, sorry, that is the 3-month age fall, 3-month age fall. So today we reached our um, absolute high level on the H fall. Didn't get to the R vol before it rolled over. So that was good. And NQ held up the most. It never really broke with a close below the daily one. So, I mean, definitely bullish this market. There's no reason to think that they're going to be selling off prematurely. A lot, a lot of interest still to the upside in these markets. No doubt about that at all, especially after, Friday's close. Crude sold off to its daily 1.25, balanced right on my levels. A little bit lower than the weekly one, almost almost to the 2, but really it's the daily 1.25 that caught it. We broke below the monthly mean, which is good. And I'd like to see that stay below that mean and continue moving lower. And gold topped out. We had 1.25% on the daily range. Weekly 2 hit right on the money. And there's nothing on the monthly. We broke the monthly range, but the quarterly, this is that 90-day R-vol that held at the weekly 2 and the month or the daily 125. So there is that quarterly H-vol up here, so there is a little bit more room, 38.76 to 38.83. But once we get past this quarter expiration tomorrow afternoon, it'll be wide open again. We'll have new month, new quarter, and plenty of time to rock and roll with our ranges. So, keep in mind the dealers and the banks and the, hedge funds do not want to sell anything off of these great rallies. Why give up all your profit to sell off now? So once they get their quarter in the book, we might be singing a different tune, right? We might be singing from a different hymnal. So just keep that in the back of your mind. If you see a lot of negative flows come in after tomorrow close, or they start rolling them, I guess, before the close, but tomorrow afternoon or Wednesday start selling off hard, you'll know why. That'll be the dip before the Santa rally, or I guess we could go straight into the Santa rally from here. We'll have to wait and see. Do we get a late correction or go straight to targets? 7,000. Where are the possibilities for December? Up here, I've got 7,068 up there. I'm looking at 7,060 to 68. 69.30 first one. So definitely looking for some follow through to the upside. Don't know what kind of correction Jamie Dimon's going to get, if anything at all. He may be they're sitting on the sidelines. Everybody's selling all those top money men, cashed out early and missed out on a good deal of the chunk of this rally. So that is just so interesting. That all the Bezoses and everybody sold their stock, good chunks of it, and market just continued to rip up to the highest level. So it's very hard to time the market, very hard. Even the insiders can't do it. So let that be your guide. Work your schedule, not what you think the market is going to do. If you need to cash out, cash out. Otherwise, hold for the flow to keep going. So we have had an incredible run since April. I mean, incredible is, I guess, the right word. We had a low of 4940.50. Um, and we got up to, it's not even, it's more than 45%. 35% rather. It is, let's see. No, yeah, about 37% rally from the April low. So, you know, just incredible. 37% is what, you could go all year and get a 37% return and be happy with that. And we did it from April to September, end of September, April to October. So 6 months, essentially a 37% rally. So if we do a contraction from there, nobody's really going to be, that concerned about it, but they don't want to lose the profits off those books. I can guarantee you that. They don't like giving it back. So that may be one thing in the favor of keeping the rally going and hitting the 7,000. So we have to, go with the dealer flow and take a look at our options positioning and GEX and Gamma. And a good way to do that is to look at our new websites. So we could take a look at quick options and go to SPX and just, take a peek at this GEX. So you can see here for this current volatility, um, it's not really showing that much. But if I select all strikes, that's where this comes into really good focus. You can see that 6660 is the high GEX, but there's a lot of GEX building to the upside, very high strikes compared to the very, very little shallow, low negative GEX strikes, very tiny, very much centered to the upside. 7,000 is definitely on the table. So that 6,800 first. Here was the 6,700. 6660 was now pinned. So we get above 6660 to the upside. Let's put this back on the quarterly. So we're at 6660 now, and you can see that that was the pin. 6670, that high GEX, and then 6670 and 6800, 6700. So there's just a lot more gamma exposure to the upside than there is this little tiny gamma to the downside, the negative. So, but we do go negative below where we are, especially down here at this gamma flip, 6640 goes negative. Right where we stopped today. Hope I can put my big, thick red dash line. There we go. That's our gamma flip, GEX flip for the SPX. For ES, I have to hand calculate myself, and my calculations are intraday for the HVAL report, but the BSNAP Halo report, but I could run a larger calculation on my quick strike platform. So I can run my quick sheets and either you know calculate a cumulative total of, well, I need more than 8 days. Let's see. I can go out 60 days, 90 days, and run a cumulative total of gamma this way. Um, but these are, calcs that I'll have to do myself and get an idea of where we may run into overall net GEX uh, flips on the ES. But having an understanding of gamma and whether the dealer is going to trade, fade, or pin a level comes into play um, very much in your trading session today, because this is how the market makers trade today, using GEX and open interest. So we really do need to have that overall framework and structure in mind, even when we're trading futures, in my opinion. I mean, it's nice to be able to just use open interest or something like that, or volume, but you really do need that GEX layer as well today. I mean, I think you may have a different opinion. But if you've got something that's working for you, by all means, I mean, who am I to, say use my method? Keep doing what you're doing. Um, I'm just discovering for myself that putting the GEX together is the most really important function for me, on top of the other layers, because I have seen volume, high volume, not even move one of my pin lines because of the dealers pinning it. Like right here, it's at the Globex Open at the daily one. I don't care how much volume you have or how much open interest you have. It's not going to go anywhere because the dealer's sitting there pinning it. These are more than market maker hedges. Talking about underlying prime dealer desks when they, you know, mark a market to move it up or down. You have no idea. They'll put an order on the bid and the ask. So many orders that we can't even see the depths of their book. Um, it doesn't even show up on our DOM or anywhere. No one can get it. Not even brokers can see it. The only ones that can see that is the CBOE, or the CME, I guess. But the CBOE absolutely can see them all. Um, and we don't know where those will come in to play. They normally will allow you to have so much distance during a period of time, a quarter, a week, a month. Um, And that's why I use my halo metrics so much and concentrate on what is available point range in a given day, week, month, or quarter, because you can come over and take a look. Oh, I didn't print my it was on my I'm printing these now on the VAR report. So I issue a VAR volatility analytics report, and I give you all the elements: 90-day, quarterly, 4-week, 12-week points and levels, so that we can see what's available left in any particular term or time frame. Because if you're at the very beginning of the month, the market is much more wide open. So we get past, this we just start on the October 1st, you've got a new month, you've got a new quarter, and you're at the, middle of the week. So you would be looking to see where those weekly flows are going, but that's the most susceptible to going into weekly tails, right? Because those new monthly and quarterly flows are going to be into play. So it's not just having the number of trade days that are in the month. You've got to have calendar days, 30 days, and then you still need 4-week data, because when you calculate on a bar of a week, and this is why it's important for you to understand this, a weekly bar has its own open, high, low, and close, right? A daily bar has its own high, low, open, and close. A monthly bar has its own high, low, monthly, and close, open and close. That is what the dealer algos use. And so that's why you need 4 weeks, or 30 days, or the number of trade days in the month. Um, the way that you can run those calculations, when NinjaTrader will package that for you in a trading template for the instrument. They'll if you select monthly, they'll automatically just include the number of days that are in that month. So for that bar. So it makes, having somebody like me who comes along, grabs all those plots, and then gives you open and close and 14 period and 1 period. I'm doing more than just generating lines. I'm also giving us a structure now with it. So it's not just enough that I know that I have open interest or volume. I want to know, am I going to break a level or not? And today it absolutely came in negative gamma. So I was expecting levels to break and that extra volatility. And then you can structure around my um, particular lines inside the range to lean on where you want to come in and place a trade inside that structure. But once you know that you're looking for expanded volatility day, you can plan for that. Or if it's a flat inside the daily ones, up and down rotational day, delta neutral, you can plan for that. So I think it's very important to know not just where the volume is, but also GEX. Because I'll repeat this for the fourth time. If you have just volume, it's like sometimes you can have a motorcycle on a tree. You can have a lot of volume, but it's not going to go anywhere, or it'll be like a tire spinning in the mud. The tires will spin, but you're not going to go anywhere because you're stuck in the mud. You're stuck with their dealer pin. And that's really the important thing. Are these lines going to play, break, or fade, and where are the lines to trade. There's so many that we can calculate and bring to you. Um, and yes, they're great levels, but which one, are operable? And that's what we're trying to decode for the market, if that makes any sense. So I hope I explained it. You can get the indicator for NinjaTrader, and the Substack subscription is included with that. But for a lot of people, they don't have NinjaTrader. They're on uh, Interactive Brokers, or they're on TradingView, or Thinkorswim, or whatever platform, and they would like the option levels and the volatility analysis levels with all the um, levels for the instruments. I do ES, NQ, SPX, crude, gold, Bitcoin, VIX, 7 instruments at the moment. But as we grow, I'll be offering more. I'd like to do more now with stocks. Now that I have the quick options for stocks and ETFs, and then the CME group in the very near future will be giving us options on single stock options, which will be fantastic, because then we can match what's on our quick options with the NinjaTrader option volume, and be able to get options on single stocks. So we can be looking at NVIDIA for earnings and everything like that. So it'll be great to have put together. We're really ready for that and get ourselves in a position to do that for you. So that's really exciting for me. But I think I can bring you the best tools available. I give you a live feed, a live stream with a subscription. So the Substack has the data for 6 instruments at the moment. And if I can get this pushed out to a live platform soon, which I'm working on, everything will be automatically available for all instruments. Um, and maybe some, signal service with that, showing that it's negative Gex and here you are at your daily one. So, I hope this makes sense. If it does, let me know. If it doesn't, let me know, and we'll try to get you some clarification. But hopefully the bells are ringing for you and all of that computes. And I hope you have a great evening. Tomorrow, end of the month, or the end of the quarter, rather, end of the month, and just wait for those contracts to start rolling. It could get a little bit bumpy in the afternoon for sure. But again, they're not going to want to sell it off before they book all these profits. That's massive profits for this quarter. All right. Y'all have a great evening, and we'll see you tomorrow. Thanks.